Dr. Chris Blackwell is Chief Executive at Vectura. Welcome to Berenberg's European Conference here at Penny Hill Park. 2013 has been a very important year for the company. A number of your partners have gained regulatory approval for drug products that you have an economic interest in. So what's the impact of that?
It's a significant impact for us. It really brings us to a very important inflection point. Products that are being approved are starting to generate royalty streams that we can use to underpin our costs moving forward. A couple of examples: drugs that have been approved through one of our partners, Novartis, in the huge area, the huge market of COPD, are starting to generate sales, and clearly those royalty streams are going to allow us to move on and grow the company in the future.
Turning to the States, the FDA recently issued draft guidelines providing advice on developing generic versions of inhaled products for the US market.
Sure.
Now, you have pipeline projects in that area, so obviously you will watch it with interest.
Very much, and those guidelines have been really helpful. Not as onerous as we'd anticipated they may be, requiring companies that have the capability, and there are very few companies that have the capability to develop products of this type, but those that do can now undertake a very straightforward program to submit a file for these products to be approved, not just as branded generic products, but as substitutable generic products in the United States. And we're very lucky to be one of the companies that we believe is in a position to do just that.
Now, you recently announced a collaboration with UCB. Now, basically it means that you take a greater share of the development risk, and in return, a greater share of the end market value if, of course, the product is successful. Is that a vote of confidence in you in a way?
I think what's happened here is that the company now is becoming more and more de-risked as products get to the market, and as I said earlier, we start to receive royalty streams which are growing, significant and relatively predictable. So licensing out drugs to big pharma companies is okay where that needs to be undertaken. We're not prepared to accommodate the huge costs of big phase 3 programs or large sales and marketing structures. So we'll need to continue to do that. But every time you do that, you license away around 60 or 70% of the value of a drug. So there have to be other ways that as we see our programs becoming more and more de-risked, that we can invest to retain more of the value, but in return take a little bit more of the risk. One of those ways is to co-develop, and this is the deal that we've struck with UCB, co-development of a product which is cutting-edge science targeted at a very large and serious market of severe respiratory inflammatory disease. And that is one example of how we're going to grow the company and retain more value.
Very briefly, you're a very well-financed company. How do you balance between investing in future projects and short-term investor interests?
Well, we always have taken a lot of pride in the way that we've managed our finances very well. We've always retained a good cash status, but at the same time, we have to grow. We are not going to be anything less than prudent in how we utilize that cash to grow the company, but we do need to make those investments to fill the pipeline and to generate more growth and therefore more value for our shareholders.
Thanks for your time and joining us here.
You're very welcome. Thank you.